Hey everybody, welcome to my mind map video of my analysis of Tiffany, ticker symbol TIF. This video is also available in podcast format, which you can download through my website, sageinvestors.ca, as well as through Apple Podcasts. Now, one of the areas I've been wanting to get some more exposure in my portfolio has been the luxury retail space, and up until recently, luxury retail stocks like Tiffany have been priced pretty high and pretty reasonably priced. But over the last while, I've noticed, especially with Tiffany, that the stock price at one point during the year was trading at about $140 a share, and it's recently dipped all the way down into the mid 70s and 80s, and so that kind of piqued my curiosity, and I thought, maybe I should just take a quick look at the stock, because maybe it might be an interesting time to enter the space and pick up some shares. So, for every company that I analyze, for every stock that I analyze, there's always a series of questions that I ask myself that will help me get a better sense of the nature of the company and the business and its ability to create wealth. And essentially what I'm going to do is just walk through those. There's basically 8 questions that I ask, and usually at the end of asking those 8 questions, I have a pretty good idea whether I want to buy it or hold it or not buy the stock. So let's just jump in right now with my quick analysis of Tiffany. So the first question I always ask every time I'm looking at a company is what do they do? What do they sell? What is their value proposition? What makes them unique, and what differentiates their products or services from other similar companies? So when we look at Tiffany, what is Tiffany? If you haven't heard of Tiffany, essentially they are they're a jewelry company. They make very much exclusive, rare, and also very high quality jewelry pieces, and their most infamous one is their diamond engagement ring. What is Tiffany in terms of a value proposition? What makes them unique? Essentially, what they do, and like what many other luxury retailers do, is they sell status. They sell status, and that status for Tiffany comes in the blue box, the infamous blue box, engagement ring blue box. If you have that blue box, you are projecting to the world that you have wealth, and have arrived, and you have a higher level of status, social status, compared to other people. And so that's when people look at Tiffany, that's what they associate. They associate with exclusivity, the rarity, and high quality. And so the jewelry that they sell there is expensive, high price, high margin for them. In terms of their competition, the next question I think that I'll ask is, who do they compete with? Do they have any other competitive similar companies that offer a similar value proposition? And so when you're looking at that, Tiffany, essentially, when you look at the brand, it's essentially a luxury brand. And similar companies that would be out there would be companies like Rolex. From the watch side of it, you have Cartier, Louis Vuitton, in that sense, Gucci, and like things like companies like products or brands like Patek Philippe. Even though that's more of a watch, but it's a jewelry piece, and so Tiffany is their competition tends to revolve around other jewelry retailers, high-end jewelry retailers. So the next question then that I will ask is, so who buys stuff from Tiffany? What does their customer profile look like? So Tiffany, again, they target high wealth, high net worth income. That's who they're going after. People who aspire to, higher status and living. It has much of a global reach. Tiffany has typically been a North American-oriented operation, but most of their sales now is coming from outside the U.S., specifically Asia, China. There's a lot of, in a way, Tiffany is known to be a very much of a magnet now for tourists, especially tourists from Asia who will just literally make pilgrimages to North America and go to the flagship store in New York and literally go back with literally boxes and boxes of blue boxes to take back home, because especially in China and Southeast Asia and Japan, the Tiffany brand carries a lot of prestige and a lot of value and status. So that's another word I think that's worth that the company is trying to project is the prestige factor. So that's who they are. They sell, basically high-end jewelry. They sell it to a lot of rich people, and a lot of people who aspire to be rich, value the brand. There's a lot of loyalty to the brand. A lot of brand loyalty. They may not buy a lot of volume, although the tourists may buy more on volume, but they come back. And it seems like people that buy Tiffany products are very loyal to the brand and will come back to it. So just looking at some of the qualitative aspects of the business, there's a lot of interesting things going on with the business. But at the end of the day, we're investors, and ultimately we want to invest in companies that can demonstrate, not that they can create a product or a service or a value or a brand that people want consistently, but can they make money off of it? And so that leads to the next question that I always ask is does this company make money? Do they make money? Do they create tangible wealth for their shareholders? Now, for me, one of my go-to metrics when I'm trying to figure out if a company is profitable or creating demonstrating strong financial performance is looking at a company's economic profit, which is essentially comparing the company's return on invested capital versus their cost of capital. And companies that can generate high returns on invested capital relative to their cost of capital are creating tangible profit. And ultimately, the markets are going to put a value and a premium on those type of companies. So when I looked at Tiffany's return on invested capital over the last 3 years, they've come in between 19 and 20%. And when you compare it to the company's cost of capital, that's about 9%. So this is a company that's creating tangible profit, pretty nice double-digit tangible profit. If you look at some other metrics, like in terms of revenue growth, if you look at over like a 5-year rolling window, it averages about 5% per year. So, and the margins are pretty high. So this is pretty much a good, strong, wealth-creating company, generating modest growth rate in revenues, which is fine, and is a very high margin business. So from an investment perspective, these are the types of things I definitely want to see. Now that we know that this is a profitable company, we can actually continue on. Normally, if the company wasn't demonstrating positive economic profit, I would kind of stop there. But so far, so good. So with Tiffany, so let's just keep going. So the next question I'll ask after this, whether it makes money, is just taking a look at the financial position of the company. Is this a financially strong business? And so this involves essentially doing a quick little look at the company's balance sheet. And so when I look at a company's balance sheet, I'm analyzing it from a couple of factors. First, I'm looking at it from a liquidity factor. Does it have enough cash to meet its day-to-day obligations? And this is where you compare the company's current assets to the company's current liabilities. And so right now, Tiffany has about 5 times its more current assets than current liabilities. So it has more than enough liquidity to meet its day-to-day operational requirements. Also of note is the company has right now cash on hand that it's greater than its long-term debt, which is something I really like to look at from a financial perspective, because it shows, again, to me how durable and how strong the company will be to withstand shocks, potential shocks that take place in the market. Next area I want to look at in the company's balance sheet is their debt levels. Do they have a lot of debt on their balance sheet, on their books? So Tiffany right now, if you look at their debt equity ratio, comes in at about 0.25, which is pretty reasonable, pretty manageable. If you look at their debt, their debt relation to their EBITDA, earnings before their operating profits, it's about 23 times. So they have 23, earnings per share divided by debt. They have 23 times cash flow to pay off their debt. So they have more than enough cash flow. They're generating more than enough cash flow to service their debt. Again, these are good things that I want to see in a business, in a strong, healthy kind of business. So far the story looks pretty good with Tiffany, but it's really important when we're analyzing companies and stocks to look at the flip side. We need to evaluate the risks. Like, what risks are out there that could potentially take the company backwards and could hurt the company in the medium, short, medium, or long term? Well, the nature of the business that they operate is it's a cyclical business, and it's driven by ultimately, if people have more money in their pockets, they're going to be more prone to spend it. So disposable income levels is important to look at. We need to make sure that's a risk, because it's a very cyclical, retail is a very cyclical kind of industry. Other risks that are out there, as I said, most of the revenues now are skewing towards outside the U.S., mostly in Asia. So there's a risk, though, that if the Asian economies were to slow down, and for example in China, if people were to slow down and cut down their spending habits, buy less jewelry and stuff like that, that would probably impact Tiffany negatively. Another risk factor is, changing fashion tastes. At the end of the day, Tiffany sells jewelry, but jewelry is a very subjective. It goes along with the fads. One of the things that's been unique about Tiffany, in a sense, is that it's been a very durable brand. They've been very protective of their exclusivity, of the rareness of the products that they sell. And that leads into another risk factor, as a potential of diluting their brand. In other words, going down market, maybe selling things more like in a factory outlet kind of place. So that's a potential there, and management, so far has demonstrated that they're very protective of the brand, but they're, they've done a pretty good job of really protecting the brand. And then finally, something that's more current in the nature is the potential for trade wars, all the trade trash talking. Tiffany, classic American icon, could become a target if the trade issues that are going on right now with China get worse. So great business, but there are some things that are in the horizon that can negatively impact the company in the short to medium to long term. And I think part of that has to do with the reason why the stock has gone from 140 to about the 70s. And I think a lot of these particular risks, specifically the trade war issues, disposable income, slowing economy, have permeated into the share price where it is right now. So if we were to look at it, and this leads to the final question is, even if we like the company and we like the stock and we think it's a profit-creating business and it's able to manage those risks, ultimately we want to buy the stock at a good price. We don't want to overpay for the company. So that leads to the final question we'll ask, which is the company cheap? Is it trading at a discount right now? So the fact of the matter is, the stock has fallen from 140 to currently about the 70s, low 80s. If you're to do a valuation on it on a relative basis, if you were to compare Tiffany to other similar companies out there, it's trading at about 18 times forward earnings. And you compare that to other companies out there, which are trading at about 12 to 15, and the industry average is about 15 years. So from a relative perspective, it's actually a little bit more expensive, even after the stock falling as much as it has. It's a little bit more expensive than other companies. But if you look at it from a discounted cash flow perspective, I've seen valuations come in between 95 and like 115. So as I said, right now the stock's trading in the mid 70s, and with a valuation of about 95 to 100 bucks, stock seems to be cheap right now. It's cheap right now, but the reality also is it's out of favor. So then ultimately, that leads to the final question of, after looking at all of this, is it worth buying? And so when I look at luxury retail, when I look at Tiffany specifically, it's been a very durable brand. It sells very rare, high quality products. It has a very loyal customer base. It's been able to generate meaningful cash flow and meaningful profitability through it. It's financially strong, has a very strong balance sheet, and it's got some risks, and that's kind of built into the share price right it is right now. So when I look at it, and right now the stock seems to be pretty out of favor by investors. So to me, this is a high quality business that's selling for a cheap price. And so when I weigh all these factors in together, to me, it sounded like, closing this off there. To me, this looked like an opportunity to buy a really solid, high quality, blue chip kind of business at a discounted price in a down market. Because at some point, the pendulum will swing and people will have more disposable income, economies will recover, and companies like Tiffany will benefit on the upcycle. One of the tenets of investing is buy low, sell high. And so right now, it seems to me that Tiffany is at a kind of low point or a downtrend point in its cycle. So this would probably be the best time to get in and buy the stock. So at the end of the day, I factored all these elements. After answering all these questions, I made the decision to buy. So I bought and made an opening small position in Tiffany. So there you go. That's my analysis, my quick little mind map analysis of Tiffany stock. If you're interested in other videos of other stocks and ETFs that I've analyzed, you can check them out on my website, sageinvestors.ca, or you can, as I said, I have podcast formats versions of these videos on my website, as well as you can download them through Apple Podcasts. You can subscribe to them there. So there you go. That's my analysis of Tiffany stock. My name is Amin Arena of Sage Investors, and we'll catch you again another time. Take care. Bye-bye.